But you ever get back up to 25 again, the lid's coming off. And I would basically say that's probably going to happen about the same time if gold goes back to 2000 again. They'll probably be about coincidental. And I would also expect, I think Patrick mentioned this, silver will outperform gold. There's periods in any gold bull market. Our bull market started in 2015 in gold from the low there. We had a buy signal in February of 2016. But you think that's old? Well, the last bull market started in 1999 to 2000 and lasted till 2011. Okay, I remember. Okay, so, and I think that the next leg up in gold, silver is going to vastly outperform gold on a percentage basis.
First, Majestic shares a tweet on August 22nd, stating strong outperformance by silver today, plus 2.15%, while gold is just plus 0.27%. Could the gold to silver ratio be starting its reversion to the historical mean of 58:1? Michael Oliver is the founder and chief analyst at Momentum Structural Analysis, a prominent figure in the field of financial analysis renowned for his profound expertise in technical analysis. In this video, Michael Oliver is optimistic about silver performance and relation to gold. He is confident in silver potential surge to $25, possibly outperforming gold, alongside an expected gold resurgence to $2,000. Precious metals prices will see headwinds in the medium term, but a recovery in industrial demand and a burgeoning solar sector should see the gold-silver ratio move closer to its historical average in the coming years, according to Colin Hamilton, Commodities analyst at BMO Capital Markets. Oliver highlights positive signals in silver trend, underscoring the significance of surpassing the $25 resistance for a potential price surge. Silver price has traded in a narrow range, marginally above $24 for the past 4 trading sessions. The white metal struggles to find direction despite Federal Reserve Chair Jerome Powell delivering a hawkish commentary at the Jackson Hole Symposium on Friday. Oliver states the surge in 2020 that led to excessive momentum, reaching up to 70% above the average. In 2021 to 22, silver industrial fabrication hit successive record highs, with volumes in 2022 16% higher than the 2010 total, wrote analysts at Metals Focus in a recent report. But by 2020, the price of silver had dropped below $12 during the pandemic. It later shot up to about $30 in early 2021 as expectations of a global economic recovery took hold. Now we are presenting you the glimpse of Michael Oliver insights from his recent interview with Vancouver Resource Investment Conference. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
After you came up off that September 2022 price low at $17 and change, you surged right through that channel top, which you didn't acknowledge. You didn't stop at it and say, oh, I got to stop here. You actually got above it. And then since then, what you've done is you've had ups and downs, ups and downs, ups and downs. And you can see on the price chart. And frankly, right now, that price chart is about where silver is today, just below $23. But what's been going on since that surge is we got a little overdone in that surge, momentum-wise. You got a certain short-term momentum indicators got overbought. So it wanted to cool down. Nice. Okay. It's cooling down, though, outside of that channel that it's already broken out above. And if you look at the price chart, I've got a green horizontal I've also drawn. It's what I'd call an idiot line because, everybody can draw it. It's across prior monthly closes. And there's 3 monthly closes up there around $25. We traded above there. This year we got to 26, but the monthly closes are all around 25, 25, 25. That's going back to March of 2022. So there's a horizontal structure there. And I'm sure if you ever get silver back to 25, they're going to take the lid off of it. Okay. But we're below 23, so it's time to focus on this, is the upturn underway. Now go to the bottom chart, and what you've got there is each monthly close plotted in its relationship above or below the current 36-month moving average. And as you can see in that surge in 2020, we get pretty excessive. Went up to 70% over. Okay. So it got hot. So it wanted to cool off. And while silver basically waffled for the next 2 years between 22 and 28 on the price chart, that momentum cooled off, kept coming down toward the rising 36-month average. So the oscillator was getting a correction. Price was chunking sideways until you got that stinger, that's price chart stinger in August, September of last year. Momentum got under the 36-month average, under the zero line. But that average is really not technically important. In other words, it's not structurally important to hold it or whatever. It's just a yardstick to measure by. But look what's happened since. Since we made that low late last year, the momentum readings have come up through a 3-point downtrend line. Just like price went through a channel, momentum broke out over a clear 3-point downtrend line that went back to the summer of 2020. So it's like a 2.5-year downtrend defined by 3 peak oscillator closes. What have you done since? You ran up to the blue horizontal line on momentum. Now, what's that? There were a couple oscillator low closes back in 2021. They were all about 10% over the zero line. So when you broke that, that's when you had your flush. Well, the rallies this year, late last year and early this year, have all peaked just short of that blue line. So it's like momentum is recognizing a prior resistance level, but it's persistent. In other words, if that were great resistance, we should have crumbled already. You don't come back a third time, okay? And it takes something over 25 to blow through that structure. So both price and momentum say, I've broken out over a channel in price. That's a positive. Give me the thumbs up on that regard. And momentum broke out over a multi-year downtrend.
Gold prices are posting decent gains and silver prices are slightly up in midday U.S. trading Monday. Short covering by the futures traders is featured in gold, along with some perceived bargain hunting. Oliver notes the stark shift in commodities' relation to gold. He points out the Bloomberg Commodity Index plunged from 237 in 2011 to under 60 by late 2020, despite gold's rise. Oliver corrects the notion that the Ukraine-Russia war caused price spikes, asserting that the surge began earlier, hints at uptrend amidst pullback. Gold prices have recently experienced a period of volatility. In March 2022, gold prices briefly rose to $2,069 an ounce due to the outbreak of the Russia-Ukraine conflict. However, gold prices saw a gradual decline, approaching $1,600 an ounce by September 2022. Let's get back to interview.
Well, first thing to say is commodities aren't linked to gold. Historically, there's times they've been linked, such as in 1977 through 1980, when gold went up 8-fold, commodities like doubled or tripled. They were in sync at that time. But if you'll look at the action since 2011, when gold peaked, commodities also made a high. The Bloomberg Commodity Index was up around 237. Okay, remember that number, 237. It collapsed into 2009. That was in 2008, excuse me. It collapsed into 2008 and 9. Along with the stock market, by the way. So it was coincident with the stock market. But then it rebounded in 2011. While gold was making a new high, the Bloomberg, instead of back at 230, was at about 170. But it was, trying to come back up. But then that whole asset category went down under 60. So we had a market in 2008 that was at 237. And in late 2020, it was trading under 60. You had a wipeout. In other words, commodity prices were taking effectively what we call theoretical zero. So as an asset category, just on valuation, it was ridiculous, okay? But commodities were continuing down from 2015 to 2020, like in an arm wrestling decline, not a collapse anymore, just they couldn't breathe, okay? During that time, gold doubled. Gold went from 1,000 to 2,000 by 2020. Summer of 2020. But it doubled, went to 140. Now, it's interesting where that Bloomberg chart, if you look at the top, there's two charts there. There's a monthly price chart going back to 2008, and there's an annual momentum chart below it. By annual momentum, what we do is we measure each monthly bar of price. How much above or below the 36-month average is that action? So it's an oscillator, okay? And it creates a different chart picture than what you see on the price chart. And that's why in late 2020, we turned bullish, because there was a massive upside breakout on the momentum charts. Price followed, of course. We had projected, when you look at that price chart, you'll notice there's a line underneath 3 different lows. From after you collapsed in 2009, it was a low in 2016, and there was a lower low in 2020. You can connect those 3 lows, and that's a channel bottom. And if you take that same channel and with a parallel ruler, raise it up across the single high that occurred in that 2011 rally, and it carried that line down parallel to the channel bottom. That's where we stopped in 2022 against that channel top, which we had expected that would be resistance. But even then, everybody, by the way, commodities basically peaked in February of 2022. What occurred then? The Ukraine-Russia war. And everybody blames the commodity price rise on that baloney. Commodities peaked when that war began, within a few weeks of that. Oil had already gone from $10 to 100 and something. All the commodities had gone up massively, well before the war ever occurred, and they crested around the time of the war. So the Federal Reserve and people like that who blame the, in quote, commodity inflation on the war, baloney. Commodities had already doubled before the war ever occurred. Okay. Since then, we've had a correction. Now, in price, you're coming down off that channel top. So pay attention to that channel top going forward. Right now, with the Bloomberg's around 103 to 107 this month, trading in that range. Its recent low was under 100. It's had a corrective pullback. Didn't go back down to 50 or 60. Okay, so it's been a protracted correction in commodities, very orderly too, not a collapse. So it was supported on the way down. And now it's sort of cupped up a bit. And we think the turn is underway now, back to the upside. But if you ever get that price chart up to the top of that channel again, don't expect it to stop. That's when the second wave really hits commodities on the upside. And right now, I'd throw out a price level, upper 120s. You ever see that again? You don't have to go back up to 140. You're going to break through that channel. And at that point, this parallel channel on price that goes back to 2009, multi-year channel, is going to break out.
As we look forward, the path for precious metals is intricate. Potential headwinds loom despite industrial and solar sector influences on the gold-silver ratio. Volatility in gold prices, influenced by geopolitical events, underscores the need for cautious consideration. What do you foresee as the key drivers shaping the future of these metals? Do you believe silver will outperform gold in a longer term? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.